Hey everyone, welcome back to Corporate Decoder, the place where we try to predict if a company is about to make us rich or if it is about to go broke. And today, oh boy, do we have a doozy of a report from Northwest Biotherapeutics Incorporated. It's a proxy statement, and let's just say it's packed with proposals that ask for a lot of your attention and maybe your approval. Before we dive into the nitty-gritty, if you like getting these kinds of breakdowns that cut through the corporate jargon, do us a favor and smash that subscribe button. And hey, we've got a fantastic community over on our Discord server, linked in the description below, where we talk about these things and more every single day. Alright, so this document is what is called a proxy statement, and it is all about the upcoming annual meeting of stockholders for Northwest Biotherapeutics Incorporated, set for the 29th of December 2025. Think of it as the company's way of asking all its shareholders for permission to do certain things. And what are those things? Well, they want to elect a new director. They want to approve their accountants. And this is a big one. They're asking to increase the number of shares they can issue. First off, they're looking to elect a director. This is pretty standard stuff for an annual meeting where they ask shareholders to vote on who should be on the board, guiding the company. This year, it's Mr. Pat Sama. The filing tells us has been on the board since March 2024 and is up for a 3-year term. His background sounds interesting. With a lot of experience in business and venture capital, even co-founding American Megatrends Incorporated, a company known for its PC components. They believe his experience makes him a good fit. Next up, they want to ratify, which basically means approve, their chosen accounting firm Cherry Bekasit LLP for the year 2025. This is also pretty standard. The audit committee picks them, and then they ask the shareholders to give it the thumbs up. If shareholders don't approve, the committee will reconsider, but ultimately, they have the final say. Now, this is where things get really interesting. Proposal number 3 is a request to significantly increase the number of authorized shares of common stock. Right now, they have authorization for 1.7 billion shares, and they want to bump that up to 2.6 billion. That's an increase of 900 million shares. The company explains this is necessary to continue raising capital for its operations. They also mention this could be used for stock options, warrants, and other equity incentives. It's quite a leap, and it's important to understand what this means for existing shareholders. When a company issues more shares, it can dilute the ownership percentage of current shareholders. If they don't buy more shares themselves, it also gives the company more flexibility to raise money in the future, which can be good or bad depending on how they use that flexibility. Then we have proposal number 4, the so-called say on pay proposal. This is where shareholders get to vote in an advisory capacity on how the company compensates its top executives. The company states their compensation program is designed to attract and retain talent, and they link pay to performance and contributions to the company's progress. It is important to remember this vote is non-binding, meaning the board doesn't have to do what the shareholders say, but they do say they'll consider the results. Let's shift gears a bit and look at who actually owns the company. This section shows us the big players. Linda F. Powers, who is Chairperson, President, Chief Executive Officer, and Chief Financial and Accounting Officer, holds a significant chunk, around 1.9% of the common stock. Therese also Pat Sama, one of the directors, who owns about 0.5% of the common stock. It's important to note that percentage ownership here is based on common stock and doesn't include all the options and warrants, which can change the picture quite a bit. Now let's talk about the money. We're looking at the summary compensation table for 2024 and 2023. Linda F. Powers, the CEO, earned a salary of $925,000 in both 2024 and 2023. She also receives bonuses with $300,000 approved for 2024, though not yet paid. Interestingly, the filing notes that Mr. Leslie Goldman, the former Senior Vice President and General Counsel, passed away in August 2025. He also had a salary of $725,000 in 2024 and 2023, with similar bonus structures. Dr. Marnix L. Bosch, the Chief Technical Officer, earns a salary denominated in euros, which converts to about $453,600 in 2024. It's worth noting his compensation varies with the exchange rate. Then we have the compensation that is tied up in stock options. This table shows a massive amount of options granted to Linda F. Powers. She has millions of options with exercise prices as low as $0.23 and up to $0.55. The filing mentions voluntary blocking agreements, meaning she can't exercise these options easily, needing to give the company 61 days notice. This is a crucial detail. It means that while these are listed as outstanding, their immediate impact on share dilution is managed. The same applies to a large number of Leslie Goldman's options. Dr. Bosch also holds a substantial number of options. It is clear the company relies heavily on equity to compensate its key people. And these options represent a significant future financial commitment. Now let's look at the pay versus performance table. This is where we see how the compensation paid to the top executives aligns with the company's financial performance, specifically total shareholder return and net loss. For 2024, the compensation actually paid to the CEO was $1,225,000. This amount is the same as the summary compensation table total, but the report clarifies that the bonus portion of this $300,000 had not yet been paid. For 2023, it was also $1,225,000 paid to the CEO, with a similar note about an unpaid bonus. For the non-CEO executives, the average compensation paid was $804,000 in 2024 and 2023. The table also shows a steady and significant net loss for the company over the past few years, with a loss of $83,778,000 in 2024, $62,599,000 in 2023, and $105,032,000 in 2022. This is a critical point. You see significant compensation levels for executives while the company continues to report substantial net losses. This disconnect is something that investors should definitely pay attention to. Essentially, the company is paying its top people significant amounts while it's losing a lot of money. Moving on to director compensation, the non-executive directors are receiving a decent chunk of cash. Dr. Navid Malik and Jay Coffer Black are each getting $150,000 in fees. Pat Sama, who joined in March 2024, received a prorated amount of $118,145. The explanation for these fees is that they are compensated for their constant availability, participation in frequent board meetings, leadership, governance initiatives, and consultations. It's noted that Linda F. Powers and Dr. Alton L. Boynton, being executives, do not receive separate director fees. Now, a very important part of this filing discusses related party transactions, specifically concerning Advent Bioservices Limited. This is significant because Northwest Biotherapeutics Incorporated acquired Advent, making it a wholly owned subsidiary in October 2025. Before the acquisition, Advent was a key service provider for product development and manufacturing. The document details several statements of work, or SOs, outlining milestones and payments. For instance, SO 8, a recent agreement for the DCVax Direct program, includes milestone payments for tasks like technology transfer and process development. Some milestones were completed with payments made or due. And here is a key detail: they are paying for work that has success-based compensation. This is a smart move, especially given prior manufacturing challenges. It means Advent only gets paid if the work is done right. This section provides the report from the Audit Committee, which is responsible for overseeing the company's financial reporting, internal controls, and the audit process. They've reviewed the financial statements with management and discussed independence and services with Cherry Bekaert, LLP. Ultimately, the committee recommended that the audited financial statements for the fiscal year ended the 31st of December 2024 be included in the annual report. And speaking of accountants, here are the fees paid to Cherry Bekaert LLP. For 2024, the audit fees were $611,000, and for 2023, they were $614,000. The report clarifies that there were no audit-related fees, tax services, or other non-audit professional services billed by Cherry Bekaert in these years. This means the company is keeping its auditing relationship strictly for the audit and review of financial statements, which is generally a good practice for maintaining independence. Finally, an important section on how shareholders can submit proposals for future meetings. They need to be received quite a bit in advance, with the deadline for inclusion in next year's proxy materials being the 1st of August 2026. This is for things that shareholders want to ask the company to vote on. They also require advance notice for nominating directors. It's a pretty strict process to ensure the company is organized for these meetings. And lastly, the company is encouraging everyone to vote whether in person or by proxy using the provided methods. They're stressing the importance of your vote for the upcoming meeting. So, what is the story here? Northwest Biotherapeutics Incorporated is asking its shareholders to approve a significant increase in authorized shares, which could dilute existing shareholders but also fund future operations. They're also paying their executives substantial amounts while reporting consistent net losses, while they are taking steps to ensure their accounting firm is independent and have structured some of their manufacturing contracts with success-based payments. The core issue remains the company's ongoing profitability. The proposed increase in shares is a critical vote. If approved, it gives them a lot more room to maneuver financially, but it also means more ownership dilution could be on the horizon. It really boils down to whether shareholders trust management to use that increased share authorization effectively to turn the company around and achieve profitability. Alright, that is our deep dive into Northwest Biotherapeutics Incorporated's latest proxy filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more of these corporate deep dives. Don't forget to check out our Discord community in the description for more discussions like this. Thanks for watching, and we'll see you next time on Corporate Decoder.